Hello guys, in this video I will try to explain something very important about what we call derivatives. Now, what are these derivatives? It's just they are not stocks, okay? But sometimes they can rely on stocks like options. It means these things are something else than a company. Okay, they are not companies. For example, Forex is the trade, you trade currency pairs. Okay, options, it's something that relies on stocks, but it is not stocks. Okay, now futures, contracts, and we have commodities like cotton or wherever commodities is. So we don't trade those. Now, what's the reason why we don't trade those right now? Because each one of these has its own risks. It means whenever you want to do something like Forex, you should understand the market, you should understand how it behaves, you understand the risk that it is involved, because you just go and just open an account. They say Forex, you can make money, and they show you a strategy or two, and you go there and they say you can put whatever money you want, no limit. Like options, like futures, they make it easy for you to open an account and just begin to trade. Now, the main reason they make it easy is they want to wipe out your account. It means they want your money. So the only way to take your money very easily is by using these Forex, options, futures, and commodities. Very easy. You can lose all your account in few days or month or two, wherever you begin. Sometimes if you don't know what you are doing, you can be in debt, and you will have very big problems. Okay, so derivatives are very risky in themselves. Okay, you can lose all your money or be in debt if you don't know what you are doing. And let's say I give you an example of options. If you buy an option, you can lose almost all your money just on being out of the money. Out of the money, it means that the strike that you choose, if you are having like a call, you think that the market is going up and next day it goes down. So what will happen to you is almost all your money will go and you will lose a lot. Okay, so if you stay more days and the stock goes down, because it relies on stocks, you will have to lose a lot, and sometimes you lose all your money. So the question is, are you going to risk all your position and by the end of the trade you lose all your money? It means if you put, let's say you put $5,000 or $10,000 in a trade like this, like options, to make money, and then by the end of the trade, like 2 days or 3 days or 1 week or two, and then you will see that you have lost all your money. So is this what you are looking for? If you say yes, it means you are a big gambler. Okay, you want just to gamble because you want too much risk in your account, but the problem is that you can lose all your money in your account. This is the big problem. Now, if not, you will be a good trader, because when you trade conservatively, when you are a beginner, it is better. Okay, so when you are a beginner, you should not risk that much in any single trade. This is one of the main things that you should understand. I will explain later, because we need more time for this. In a single trade, you should never risk too much. If you risk in each trade, you risk 10%, 20%, 30%, 40%. By the end of the month or 6 months, you lose every penny that you have in the account, because you need to preserve your money and trade only conservatively. When you become professional trader, this is the opposite. When you become professional trader, okay, here you are allowed to do wherever you want. Now, what's the reason? The reason is that you know what you are doing. You calculate the risk, you calculate the trade, and then you do the trade. It means here, you know what you are doing, you know your risk, so you are what you call professional trader. Most professional traders know what they are doing, they have money to trade, and they have big account. Even when you begin with a small account, it's good, but the main thing is to have more money in your account to trade wherever you want. Thank you very much.